Bitcoin taking a dip also with Ethereum and many altcoins. This is as Ethereum ETF goes live 2 days ago, and it's turning out into a sell the news event. Something similar that happened to Bitcoin ETF approval back in January. We did get a dip for several days. Now, this level of resistance on the higher time frame was very much expected on a video update a few days ago when we were trading at $64,000. Looking for that rise, we had the lower high resistance trend line from this descending channel and a possible fake out choppy action above the point of control in between March and July. We are getting that reversal on the higher time frames, hitting that resistance, getting above the point of control, very choppy, not a successful breakout, getting the drop. Now, most importantly today, we're talking about the levels of support, where the price could get a bounce and where the price could get rejected also if we do get a little bit of a dead cat bounce, because we're going to talk about Elliott wave theory, try and understand the timing, what waves are we in right now, are we going to go to much lower levels? We'll be talking about that in this episode, guys. Remember, my favorite trading platform is Bybit. If you are interested in trading, got a great bonus down below. And if you can't trade on Bybit, I would suggest bluffing. They have proof of reserves. You have the biggest bonus down below, and it's a no KYC platform. Just with an email and a password, you can start trading in minutes and claim that insane bonus down below. With the more trading you do and the more deposits, you'll be getting airdrops every single week to your account the more you trade. Okay, take advantage of that bonus, and let's dive in right away here with the Bitcoin technical analysis. So yes, higher time frame, resistance from this descending channel, fake out from the point of control of the range, very choppy, low volume, a lot of resistance. Now we're getting the pullback. How low can we go? Is this the end? Are we going to go to the lows? Fill the CME futures gap that we do have round about the $58,000 range. Is that going to happen? Well, let's talk about the local levels of support that we do have here on the chart, okay? And it's as simple as looking at, daily levels, weekly levels, naked point of control, value area low of the entire range as well. So let's zoom in on the lower time frame and take a look at Elliott wave theory to see the possibilities of the levels where we could get a significant bounce, looking at Fibonacci retracement. Now, there is the local bearish case scenario where we have finished 5 waves to the upside, something that we've been talking about for the last few days, and we are inside a very large corrective move for the next coming days, even going as low as the 7/8 Fibonacci from the pivot low to the pivot high. Now, most commonly here for this retracement, you would be looking at 50% to the 7/8 Fibonacci in the next coming days. That is in between $60,700 and $56,500. Even though if the price comes all the way down to this area of the 7/8 Fibonacci at $56,000 range, this could still be bullish. You'll be forming a much larger wave too, which is very common, and then get the reversal. So we just need to be ready for that scenario, guys. We could be in a downtrend for the next coming days. Of course, with the dead cat bounce forming that B wave, all right? Now we need to analyze where is the strongest levels of support. We are currently hitting a daily level and we are getting a reaction. This daily level here was from last week, as you can see on the chart, okay? And if we do go to the daily time frame and zoom in here, we can see that that daily close and open was right over here. And this is where the price is getting a stop. It is getting a reaction from that daily close and open that we had on the 18th and 19th of July. So I like this level, guys, here, even though on the lower time frames, I am a day trader. I do like this zone. This zone could retest the low. We could be looking for a local double bottom and get a significant reversal in the coming days. Okay, so I am looking for this range, looking for those double bottoms at this level, triple bottoms to potentially get a reversal. We are seeing proof of support. Now, the weekly naked point of control, this did not get any support at all. When we do analyze the fixed volume profile from the previous week, and we analyze the highest volume node, which is sitting here at 64,700. there was no reaction whatsoever. We just sliced through here just a few hours ago, and we are trading beneath the level, okay? So no reaction, no consolidation. This is getting a reaction right now. So as we are testing the lows, if we do get a reaction, all right, from that low and recover above the daily, it would be interesting to see a dead cat bounce scenario. If we just slice through here, we do not get any reaction, we do not see any proof of support, the next level that I am looking at is the value area low of this trading zone that we had last week. This is sitting round about $63,300. We could dip down below this level. We do have a bunch of liquidity still below $63,000. As you can see, we have 600, 700 million. There is a lot of liquidity still beneath us, and we could be grabbing that liquidity, okay? So what I am looking at here is either a quick wick beneath this low over here, get a reaction, swing failure pattern, get some proof of support here, and the bear's getting exhausted, and look for that really nice reversal for a significant bounce of several $100s or even a couple of $1,000s. So that is the next level that I'm looking for a possible reaction. If we do get that reaction, I do see the reversal happening. If we just slice through that level, the next highest interest zone is that 382 Fibonacci retracement, okay? From the pivot low here to the pivot high, that is where we do have a series of higher lows right there, okay? This is great zone for a possible swing failure pattern, claim that liquidity that we do have beneath this area, and then get the significant bounce to either form a B wave or have massive continuation to the upside, because there is another local bullish case scenario on Elliott wave theory. We do have this one right over here, completion of 5 waves, and now we're correcting down, and we have the other scenario where we formed here a 1 wave to the upside, where we have this 1 wave right over here, and we are forming the 3rd wave that has been formed already right over here, and we are inside of a 4th larger wave, possibly forming an ABC corrective move already close to its finish, and get a rise to claim the highs again. Now, most commonly here for a 4th wave, you want to retrace down to the 382 Fibonacci and the 50%. When you take a look at the pivot low of this possible 3rd wave, we can see that we still haven't reached the 382. Now, a minimum target zone for a 4th wave is the 236. Now, we've sliced through that level. Now, the next level is the 382, which is slightly below this value area low and this higher low. So I do see the possibility of getting a reaction here. If we do consolidate and get a reaction, I would be looking at this possible scenario. I'm just going to put this in the yellow so you can understand what scenario I am looking at here, okay? So you can clearly see here, looking at Elliott wave theory. Let's go right away and turn this into yellow to look at the higher time frame possibility, okay? This is definitely a possibility right over here where we've completed the 3rd wave and we are inside of the 4th wave. Something interesting about this fact, all right, if we're looking at this scenario and we do zoom in on the lower time frame right in this zone, we can get Fibonacci extension from the highs created on Monday, the 22nd of July. Look at this as a 1 wave down, okay, and a possible A wave, this a B wave, and right now we can see how we are hitting the 1-to-1 extension where we are getting a reaction with that daily level, okay, daily level 1-to-1 extension. This could be a possible end of the 4th wave here, and we're going to start rallying to claim the highs, okay? We need to see proof of support, double bottoms, all right? We could continue to the downside, guys. We are in a local downtrend, so there's no need of this being the low, okay? If you want to look for trading opportunities, I would suggest looking for those tests of the lows, all right? And double bottom scenarios, and manage risk accordingly. We are getting a reaction at this zone, so it does have a chance. Next level is these lows right over here. Have to check the reaction. No reaction from this level. I am looking at these lows at $62,300. That is a great level. It is also in confluence with the 1.618 extension. Look at this. 1.618 extension from this move. Bang. To hit these lows, grab the liquidity and get a reaction. I would be looking for a significant bounce. This is a swing failure pattern level that I am looking at here on the higher timeframes. Now, these are all bullish case scenarios on higher timeframes, right? You're looking a little bit bearish now. You can drop another couple of $1,000 and overall looking for a reversal, such as an A wave, okay? On the much larger scenario, okay, we do have the other scenario that we mentioned at the beginning, which is a completion here of 5 waves up, and we are inside of an ABC, right? So overall, looking for a low formation at some point here to get a reversal, but this is going to be, you know, the moment of, are we going to form a B wave and come back down, or are we going to shoot up here to the upside? So higher time frame bearish case scenario, I really am not counting on it just yet. We would have to get some more aggressive moves down, and on the bounce, I will be analyzing for the possibility of a lower high and continuation to the downside. This is still looking very corrective in my opinion. Yes, we could go lower. The first levels of interest are right over here. This is a good level without a doubt. I'm looking for this price to hold in the next coming hours. If it does not hold, this is the next zone that I am looking at. And if this doesn't hold, we're just slicing through. These lows are really important, okay? You have a liquidity grab from that level. We have a lot of confluence. Also, you have the previous month close exactly where we have these lows right over here, the 382 Fibonacci for this possible fourth wave that we are forming, okay? Get down there, the 1.618 extension. This zone is incredible, guys. This is without a doubt a level where the price is likely going to get a reaction. You could be forming a swing failure pattern and a recovery or a double bottom. This is the zone that I would be interested to look for that reversal point. Now, levels of resistance. Let's just clean the chart here 1 second and talk about the levels of resistance. What if the price gets a major bounce from this point? Are we going to form a lower high and continue to the downside? The most important levels of resistance without a doubt would be that point of control of this range that did not get any reaction as support, but overall I would be looking at this zone to have a lot of resistance, okay? That weekly naked point of control that we do have right over here at this zone, right? We do have that naked point of control right over here that could be providing that big major resistance, okay? So this area is a level that I'm looking here for the price to actually reject possibly, okay? So paying attention to this area. If we do get that dead cat bounce, all right? If the price is getting a little choppy and we are forming some local bearish CVD divergence, I will be paying attention to that scenario. If the price is suddenly getting some big major higher highs on the CVD, then I will be paying very close attention. It does look like that the CVD on Bybit is already forming some very aggressive bearish CVD divergence here locally, meaning that the lows can be claimed again. However, if the price gets a recovery here and the CVD divergence just continue to the upside, well, I am looking here, if we are going to form some bearish CVD divergence, higher highs on the CVD, you're forming lower highs on the price action, without a doubt, I would be looking for a reversal back down. So paying attention to the CVD divergence, looking at this naked point of control, value area high of this trading zone, all right, that could be forming some resistance for then the price to roll back down to at least claim the lows. This is the local level of resistance, value area high, naked point of control of this zone, which is in between 64,700 and 65,100 zone, all right? Big level, without a doubt, where the price could just get a reaction, okay? Exhaustion, you're forming bearish CVD divergence on the CVD, and you're rolling back down to test the local lows, okay? So price needs to see a big major pump. I am not bullish just yet, as in a big reversal. We need to get above major levels of resistance. The first level of resistance, of course, would be that point of control of this range, value area high, lower high resistance trend line that we do have here. Until we do not start breaking above here successfully, getting back inside of this range, then it will not be looking too great, guys. Lower is very, very possible, at least to claim this low and this low, as we do have a bunch of liquidity here still, okay? We can see the liquidity even beneath $63,000. We are very close to claiming, you know, a few $1 billion of long liquidations, okay? So We could be going to lower levels on the higher time frames without a doubt. The main reason why I am looking for a higher low on higher time frames is, yes, no doubt we've been pumping for the last few weeks. This is just a natural correction. We're going to claim some liquidity, find proof of support at some point, and then get that major bounce as the amount of liquidity that we have above $68,000 is billions and billions of dollars of short liquidations, very likely to be claimed in the next coming weeks. This pullback, very much expected, going down right now. Now we need to see that proof of support here in these levels of support that we mentioned, okay? Those high confluence levels. If we just slice through, guys, from these levels of support that we mentioned in this video update, then the next level that I do see potentially holding as a must is from this pivot low to the pivot high, from this pivot low to the pivot high. We do have the 50% Fibonacci retracement area. This 50% Fibonacci at $61,000 range, give or take a few $100s, you got a bit of a range right there. We do have some confluence at that zone. When we take a look at the previous week ranges, okay, we have the weekly open, we have the previous week low, all right? Previous week open and previous week low is round about that zone. You'll be filling most of the previous week uptrend, all right? And that is a lot of support. It is in confluence with the 50% Fibonacci, the previous week open, previous week low. That is a zone that I would be expecting some significant support. Let's take a look at the CME futures gap. That would be round about the highs of the CME futures gap. That would be the next level that I would be expecting a bounce. If we just drop very aggressively in the coming hours, this level, top of the CME futures gap, you have the 50% Fibonacci from the low to the high. You also have the previous week open and previous week low. Okay, that is just in case we just slice through here. We need to have those levels marked. We got this one and we got this one right over here. Okay, I'm expecting a bounce. I am looking for a nice swing failure pattern from these levels. Without a doubt, we could be sweeping up all of that liquidity that we do have here on the higher time frames. Legends, this is going to be it. Make sure to subscribe to the channel. Later on, we're doing a live stream, okay, looking for some day trade scalping opportunities, and we also focusing on Ethereum full technical analysis to look at those different opportunities. Thank you, and I will see you in the next one.